The keenly awaited budget for 23-24 is out today. When we look at the finance bill, over the last few years, we have this trend where successive decisions of the Supreme Court or High Court, they are reversed by proposed amendments in the finance bill. We will talk with one such amendment which has been proposed in this finance bill. Section 28 into bracket Roman 4 is a provision which has been there on the statute for almost since 1964. It provides that any benefit or perquisite which is arising in the course of carrying on of a business or profession is taxable as business income. In 2018, we had a landmark decision of the Supreme Court in the case of Mahindra and Mahindra, which provided that for any income to be taxable under 28(4), it had to be in kind, and therefore if anything was received, if a benefit was received in cash, then it was not taxable under 28(4). Now this is the decision which has sought to be undone by the proposed amendment, and the amendment provides that even if the benefit is received partly or wholly in cash, it will be taxable under 28(4). There is also a corresponding amendment in 194R which was introduced last year, where any benefit or perquisite which is provided, there was a TDS applicable under 194R. So a corresponding amendment has now also been introduced in 194R to provide that if such benefit is provided partly or wholly in cash, then TDS under 194R will also apply. So what is the impact of this proposed amendment? I think it would have far-reaching impact, because the Supreme Court decision has now been proposed to be undone, and therefore if a working capital facilities availed from a bank, if they are settled with a lower payment, then whether such a benefit will be taxable under 28(4) would be a hotly debated issue. In the context of 194R, we have a recent CBDT circular which have said that if a bank or a financial institutions provides any waiver of any financial facilities, then TDS applicability under 194R will not apply. But the point which has to be noted is that the CBDT circular is only with regard to 194R, and therefore as far as taxability of such an amount is concerned, the question will now become a very open question, and therefore one will have to deal with the taxability that after the proposed amendment, whether such waivers or any other benefit which is received partly or wholly in cash, whether they are taxable under 28(4).